Good evening, everybody. Welcome to our webinar tonight. My name is Shaun from Berg. I'm from PSG Online. Tonight's topic is rational analysis. I hope you guys can hear me clearly. This is our agenda tonight. So the topic is rational analysis. I was going to give a quick introduction why I talk about this. But ultimately, it's a stock picking strategy or share selection process. You know, most people use a bottom-up approach, maybe fundamental analysis. Some of you might use the top-down approach, maybe technical analysis. And then the idea is that I like to combine both, and that's why I coined the phrase rational analysis. Okay. My objective tonight is just to give you some kind of idea, the way I approach the market. I've been involved in the markets for many, many years, and it's just kind of a detailed approach to the market and some kind of system. And I always use the word system as an acronym. System stands for save yourself stress, time, energy, and money. So and the idea is that if you can create a system and you refine it and tweak it, you should have better and better results as we go along. Okay. So as a quick introduction, there's three things you need to know. Bottom line, to make money in the stock market, you need to know what must I buy, when must I buy, when must I sell. So to answer those three questions, we break it into two approaches to the market. Some of you might be more fundamentally orientated, more looking at the financial statements of the company, looking at the big picture, the economy and things like that. Some of you will be looking at more the charts and using technical analysis. And obviously, there's only two factors involved in technical analysis, price and volume. So this is the two approaches to the market, two ways of analyzing a share, and this is the foundation on the lay tonight's presentation on. Okay, so let's get into the nitty-gritties, what I call a bottom-up approach. This is more for the investor. When I talk about a bottom-up approach, you ignore the economic cycles or what's happening in the economy, but you focus on the individual companies themselves. And I find the best way to do this is to scan the market based on fundamental criteria. So you become more familiar with the companies, obviously their financial reports, or what's the nature of their business, what's their products, what's their services, what they do, and then you compare that company now to its peer, and you do some sector analysis. It's what we call a bottom-up approach. And I'll show you some ideas to start we use on our website. We have tools that help you scan the market based on certain criteria, and then from there you want to compare it to its peers, and then choose the best share. And ultimately, the process here is to create an initial watch list. And from the watch list, you'll be choosing shares for your portfolio. Okay. So this is the best method to do this is what I call a scan, a fundamental scan. And this is very big. I know some of you have seen this before, and I know a lot of my PSG Online clients on this webinar. So it's a bit of a repetition for you guys. It's one way to learn. I always like to use the analogy of a magic wand. If I had a magic wand, what kind of shares would I like to invest into? What shares would I like to select from a fundamental point of view? I like to buy into shares that are undervalued. I like to buy into shares that are profitable. And I like to buy into shares that have manageable risk. So this is very, very broad. So from a valuation point of view, there's various ways of looking at it. I'm using a scenario here, what we call the PEG ratio. And in past webinars, I have discussed it. What does a PEG mean? I'm not going to go into too much detail tonight. There's a lot of resources available on our website. You can go dig a bit deeper. But our benchmark, our criteria will be a share looking on a PEG below 75. Ideally, between 35 and 75, we classify that as an undervalued share. When we look at profitability, again, there's a lot of various financial ratios you can use, operating profit margins and things like that. I like to use a thing called return on equity. My benchmark here is I'm looking for a company that's growing by at least 15% plus. Yes, there are companies doing much more than that, and obviously much higher numbers. I'm looking here at sustainability. A company can grow 15%, and that's quite a stable growth every year. Okay, it's all very well growing 50%, but can you maintain that kind of growth year in, year out? So 15% is a nice little benchmark. When I look at risk management, I'm looking at interest cover. In the past, we used to look at what we called debt equity. Interest cover, I find, is much better, because it gives you a better clue, can the company handle its debt? Interest has to be paid on the borrowings. So as long as the interest cover is covered 3 times out of earnings, we say that the debt is manageable. This is for a large cap stock. You go so far as a mid cap, but for a small cap stock, you might want to have a higher interest cover, 5 times cover as such. Okay. But saying that, that's my benchmark on our website. Once you clicked in, or you logged in with your username and password, there's a button called research. Let me just bring my little cursor in here quickly so you can see what I'm talking about. Anyway, there's a button here called research, and then there's a button called search. And there's 12 different criteria based on all these different columns. So my first criteria here, I'm selecting the PEG ratio greater than 75 and return on equity greater than 15 and interest cover. So obviously the more criteria I put on, the stricter it becomes. So it scans the whole market, roughly about 400 stocks on the market, and it spits out a list of shares like this. Okay, so you can see there's Comair, there's Cashball and things like that. And from there, if I click on, for example, Cashball and the share code, it'll take me through the company's analysis, and I'm looking at Cashball's share code CSB. There's a lot of information regarding the nature of the business, the prospects going forward. But here's a little table just to show you, comparing one period to the next. Obviously, this was December period, and this results came out in March. So, the end of September will be the year end. So only in 2 months' time after September will be the financial year end. So now you can start anticipating what the results could be like. But going back until December, you can see that the historical PE, if I look at my second column up here, so historical PE is 14.4. At this point in time, the PEG ratio was, the yellow part at the bottom here, was at 80. Remember, at the moment, it's below 75. The share price has dropped. There's my interest cover. So this company is going to go into liquidation. They've got enough cover to cover its interest bill. My return equity, more than 15%. So this will meet my initial criteria, and from there I'll dig further. What does this company do? Go to the company's website, download the financial statements, get to learn all about the business. So this is all part of what we call a top-down approach, or using the fundamental approach to the market. Okay, let's talk about a top-down approach. Now, there's two ways of doing this. This is the way I use it. Top-down approach, if you had to use it just with looking at economic cycles, and from there chunking down, you're thumb sucking. I like to use more of some technical indicators, and the indicator I like to use is an indicator called relative strength, because I want to see I want to find the shares that are outperforming the rest of the market. So relative to the JSE All Share, I want to find the best sectors, the best industries, and then from there the best sectors, and from there within those different sectors the best shares. Okay, so again, with my magic wand, I like to wave my wand. From a technical point of view, I like to find shares that are trending up. In other words, they are bullish. How do I know that? I use cycle analysis, be it primary cycle or secondary cycles, or in the bull market or bear market. Definition of bull market: higher highs, higher lows over a long period of time, from a few months to a few years. Secondly, I need to establish, are we in a correction or a rally? So I look at the secondary cycles. That goes from a few weeks to a few months. Okay, within a long-term cycle, I want to buy in the dips. So we talk about buying when the shares are oversold, and there's various technical indicators you can use. I like to use the MACD, stands for Moving Average Convergence Divergence, because it works well in both markets. It works well in the trending market, and also when the market's moving sideways, what we call a range market. Okay, and then also what I mentioned now is I'm looking for shares that are outperforming. I want to go for very strong shares. The shares are in demand and things like that. So I use the relative strength indicators, or what I call relative strength analysis. Okay, so again, this is where my WENT software, you can use whatever software you want to use. In this situation, I scan the market based on moving averages, based on relative strength, the sector, JSE sector, relative to JSE, or the All Share Index. Find me the shares that are in bullish trend and outperforming, and there we go. Split out a list of stocks. And then from there, I want to look at the indices, and then from there, within the indices, I want to look at the different sectors. Now, just of course, of time purposes, I'm going to speed it up for you. Here's the financial sector. So the top graph, the top half of the graph shows you the JSE financial sector. It's above those moving averages. The green line is a 200-day moving average, and the red is your 50-day. So you can see it's above it, so the trend is bullish. Okay, that's the first criteria is met. Secondly, the bottom half of the graph shows me relative strength. Now, again, you can see recently moving a bit of sideways, but it's above those moving averages, and it's breaking out above a previous resistance level. So I've drawn some resistance trend lines or trend lines on the graph, a horizontal level, and it's also broken down above that, or broken up above that resistance trend line. So it's a breakout. It's highlighting for me that technically the financial sector relative to the whole market is starting to get stronger. Okay, so you want to be ahead of the curve and you want to be involved with those shares. So one of the other sectors that came out, apart from the financial sector, within the financial sector was the life insurance sector. So here you can see the nice little channel up long term. It's above those moving averages, so it's bullish. As short term has been moving sideways, but you can see it's about to break up above that previous resistance level. And this will be new highs. If it breaks above new highs carry on making new highs. And that's the kind of sector you've got to be involved in. So again, the bottom graph shows you that relative strength. We've been moving sideways. We've got a good chance of breaking up above resistance level. So within that life insurance sector, I go look at all the different shares. Okay, Old Mutual, Sunlam, and so goes on. And one of the stocks that picked out, that came out for me is a company called Clientele. Okay, a lot of us know about it. So you can see it's above its moving averages. That there at 18.50 that's a high. Okay, there's some support levels here at 16.70. It's above that 50-day moving average. This is where I bring my MACD now. It's anything below the zero line is what we call oversold. So it's oversold. You can see last time it was back here in April. You can see this nice little rally it had. Okay, so it's pulled back again, and the low is lower than is higher than the previous low. But on the MACD indicator, it's just crossed up above the zero line. I classify that as a buy signal. So I've got a good chance that there's momentum and there's more upside potential. So this is one way of using a top-down approach, using relative strength indicator and from there chunking down to the individual shares. I just find it's very time-consuming sometimes, but I like to do both sometimes if you've got the time. On the industrial side, you can see there's a nice little up channel, and then we move sideways. A relative strength indicator, we're breaking out above it. Within the industrial sector, the food producing sector, the food producers, the Astrals, Tiger Brands, etc., are doing very well. You can see how that's been running, also very, very bullish. Relative strength is starting to turn, and it's above the support trend line. So they look like it's starting to go from a underperforming to a market performing to an outperforming sector. And out of all the shares in that sector, the one I like the most is a company called AVI, Anglo Industries. Again, on the MACD, you can see it's about to cross up above its the trigger line of the MACD, still below that zero line. I like further confirmation if it does cross above that zero line, and that'll give me a very strong signal. You see it's recently broken out below that support trend line and in bouncing along a support line. But it's still way above a 33% retracement level and still way above this 200-day moving average. So remember, the process here is I'm adding shares onto my watch list. This is my initial watch list, and from there I can dig in a bit deeper. Okay. The challenge of this approach, obviously, I still need to know fundamentally what's the company about. Okay, is it still undervalued? Is it profitable? Is it expensive? That kind of stuff. But if you want to go so far, and that's what the next approach is all about. What I call combining the two approaches, and I coined the phrase rational analysis. Okay, so that's a challenge about using technicals alone. You still have this bit of doubt. Is the company still, is there still a growth opportunity? Is there still value? Is there risk management? So when I talk about combining the two approaches, before I do that, just to bring in some definitions. We talk about analysis. This is I got from I can't remember which website, but there's a link here to the source. Analysis is the process of breaking a complex topic into smaller parts. The idea there is to gain a better understanding of the bigger part. Okay, that's one way of looking at it. Alternatively, analysis is a detailed examination of the elements or structure of something. So when I talk about rational analysis, this is the process of analyzing looking at the big picture and then chunking it down. Talk about rational behavior. So you're more guided by conscious reasoning, okay, than experience. So you're going to go through your whole process, and you can see the second part there. You're employing more logical, objective, or systematic methods. And my objective here is still to reach a conclusion or to solve a problem. Okay, so you're not affected by emotion. So it's pure mechanical if you use it that way. Okay, so combine the two together. That's why I call rational analysis, if that makes sense. Okay, so here we go. There's the two approaches, fundamentals and technicals. I like to go one step further and add the other thing in called safety, or what I call quality. So yes, it's all very well to look at undervalued quality stocks, but also I want to get my timing right. Okay, so going back to our fundamental analysis, where we did this now. We did a scan of the market based on certain fundamental criteria. What I like to do is take that list now and put it into Excel spreadsheet. That's what I've done now. And then from there, I rank them based on certain columns. So you can use the PEG ratio, for example. And then from there, I want to focus on the stocks that are the cheapest in this list. Okay. So, for example, if I remember rightly, I think it was Ellie's was a 46 per year, or 46 PEG ratio. Going a bit higher, I think it was 57, it was Impala, and so it goes on. But the idea, again, you click on the share code, takes you through to the company information. I like to go one step further, take that list now and create a watch list in my Win software. So I know if I know fundamentally the share is undervalued, it's profitable, manageable risk. What I do now is get my timing right. So I create a watch list and I scan it. So yeah, I create my watch list, the shares you just saw now. And the next step then is to scan it based on certain criteria. So I've got the list already. So the watch list, it's smaller, it's more manageable. Out of this watch list, I can scan the shares that are bullish, that are outperforming, and also obviously oversold. So I scanned this, and this I did last week, Friday. Out of all those stocks, Comair looked to one of the better opportunities. Looks like it might be creating a bit of a head and shoulders formation. So that support trend line is very, very important. It's still above the moving averages, so it's bullish long term. Relative strength, it's a bit of a sideways market, but I'm still calling it outperforming. Oversold, in the top right hand, top right is the MACD indicator. It is still in oversold territory, and the bottom right shows you what they call volume price trend. So that shows you volume accumulations. The institutions are buying it. There's no big sell-off yet. So this is the process I would use combining the two together. But I still find that's cumbersome. So I came across a program quite a few years ago, and I know you guys have, some of you been on my webinar last week. It's a company called VectorVest. I use it a lot. What I like about it, it combines the fundamentals and technicals for me already. Okay, so it brings in the value plus the timing, as well as also the safety or the quality rating. So this is just looking at the top 25 companies on the safety or the quality rating. So this is just looking at the top 25 companies on the market, on my one particular watch list. And I'm sorry that my cursor doesn't want to work, but right next to the recommendation here is this VST column. So VectorVest automatically combines all these three together. You've got relative value, relative safety, and relative timing. And then it combines all three ratios together and gives it a rating. So VectorVest, and this is data compiled by Reuters, okay, on all the JSE listed companies. Telkom is rated as the highest value safety and timing stock. Okay, so what I like to do is go down this list, and you can chop and change these columns and find the best opportunities. But I like also, as you highlight these different columns, and then from there you can also sort of get the technicals. But the recommendation on Telkom last was a buy recommendation. The share price, this is until Friday's data, that was a 57 Rand 15 in cents, but the value that Vector gives that is 69 Rand. Okay, so there's still things, opportunities there. Same with Astral Food, 143 compared to 173, 44 for Sappi, 56. So all these stocks, they still see there's more upside potential. So what's important now, and I'll just show you the next slide, is Telkom. Okay, so yes, it's making new highs. Okay, this purple line here, this magenta line is the 40-day moving average. That was the lowest way back here, and it's just recently hit a high. Remember, new highs can make new highs. Okay, the best time to buy is obviously when it goes way below the zero line here on the what they call RT indicator. So you're buying in the dips. This blue line, by the way, is a stop loss. Okay, so it's still way over stop loss, still way above the moving average. So I like to buy in the dips again. It comes back again. I like to buy into the dips. But this helps me just to make a more informed decision. It takes me a few seconds by looking at the fundamentals and the technicals together. Okay. So, guys, I hope this is you found this beneficial. Just quickly, the second part before we go into conclusion. Okay. The idea, my main objective tonight was to highlight for you a way to create or refine a stock picking process. Okay, so the idea is to create watch lists of potential winners, and obviously over time, and it comes with experience, you tweak those watch lists. On the PSG Online website, we're allowed to create 3 different watch lists, and I like to keep them separately: financials, industrials, and mining resources. And then from there, I like to rank them to find the best opportunities. So with every presentation, so I missed the slide here, bring it all together: fundamental or the bottom-up approach, using a value filter, looking at company analysis, and then from there, do a comparison. It's one way of choosing some shares. A technical approach or top-down, I like to use technical, scan the market, and I like to combine all 3 together. You can do a scan that combines all those 3 together. Alternatively, what I call rational analysis, combine the fundamentals and the technical together, where I'm looking for value, safety, and getting my timing right. Okay. So this presentation is being recorded, so we will be sending it out to you guys as well as the PDF. Okay. So guys, but thanks for your time. Thanks for your support. Let me see if there's any questions coming through.